Bitcoin has shown some signs of life recently, and a few indicators are starting to flash early buy signals. But the key question right now is whether the market has actually reversed, or whether this is simply another phase of consolidation before the next move. Some indicators suggest accumulation conditions are forming, but we still do not have confirmation of a new uptrend. First, let's begin with the structural foundation of the market. Bitcoin remains above its 200-week moving average, which currently sits around $58,000. Historically, this level has acted as one of the most important long-term pivots in the entire Bitcoin market structure. So far, price has not yet touched that level during this correction, which suggests that the broader structural trend remains intact. However, it also means that the market has not yet fully tested its deepest structural support. This level therefore remains an important pivot if the market experiences additional downside pressure. Looking at the logarithmic growth bands, Bitcoin currently sits within the lowest macro band, roughly between $54,000 and $86,000. Historically, this region tends to act as a long-term accumulation zone, where price consolidates before the next cycle expansion. So structurally speaking, we are currently in the lower portion of Bitcoin's macro growth structure, but structural positioning alone does not confirm an uptrend. For that, we need to examine participation and momentum. When we move to trend participation, the picture becomes more cautious. The 30-day versus 365-day moving average bands crossed downward in November 2025, and that downtrend remains intact today. So despite recent price stabilization, the broader trend structure has not yet reversed. Another important signal is the number of days spent below the 50-week moving average. Bitcoin has now spent 48 days below this level. Historically, major trend reversals typically take 50 to 60 days to develop, which suggests that the current downtrend phase may still require a few more weeks before a confirmed reversal can form. Volume also provides an interesting signal this week. We recently observed a large volume outflow, which historically can appear near periods of capitulation and therefore sometimes presents early accumulation opportunities. However, the magnitude of this outflow is not yet as large as what we typically observe at major cycle bottoms. So while this signal suggests that selling pressure may be beginning to exhaust, it does not yet provide strong confirmation of a definitive bottom. For now, it simply reinforces the idea that the market may be transitioning into an accumulation and consolidation phase rather than a confirmed reversal. Now, momentum indicators are starting to show early changes. The normalized MACD has generated a buy signal on the weekly time frame. However, historically, the most optimal entries tend to occur on the third or even fourth signal, rather than the very first one. So, while this signal suggests momentum may be stabilizing, it does not yet confirm that the market has transitioned into a sustained expansion phase. In other words, yes, Bitcoin appears to be trading at a discount relative to its recent highs, but without confirmation, it would be premature to assume a full trend reversal. Moving to valuation pressure, the MVRV momentum indicator remains negative and continues to deteriorate slightly. This metric tracks the statistically smoothed movement of the market value relative to realized value. Historically, deep negative MVRV momentum tends to occur near cycle lows, but as Bitcoin matures, we typically expect less extreme deviations than in earlier cycles. What this indicator suggests right now is that the majority of the downtrend may already be behind us, but it still does not confirm a definitive bottom. Looking at statistical positioning, the Z-score price probability metric suggests that Bitcoin likely established a statistical bottom anchor around $60,000. However, statistical extremes do not necessarily mark the exact price bottom. In consolidation phases, these metrics can remain depressed for extended periods. A good example of this occurred in 2022, where the Z-score reached its -2 sigma level, yet the market continued consolidating for almost a year before a sustained uptrend developed. So statistically speaking, the market may already be in the lower tail of its historical distribution. but that does not necessarily mean the consolidation phase is over. Putting all of these layers together, structurally, Bitcoin remains above key long-term supports. Momentum indicators are beginning to stabilize. Valuation metrics suggest most of the downside may already be realized, but trend participation has not yet reversed. Which leads to the key takeaway this week. There is currently no confirmed reason for a new uptrend yet. The most likely scenario for now remains continued consolidation or possible distribution before the next major expansion phase begins. All of these indicators, and many others, are integrated into the SigmaQuant regime engine, which combines structural, momentum, valuation, behavioral, and on-chain data into a single probabilistic market regime model, producing live allocation bands. And according to the current regime model, the market still sits within the accumulation phase of the cycle. But the important question now becomes, when does accumulation transition into expansion? How do we position in this scenario? Because historically, that transition is where the most powerful trends tend to begin. If you want to track that shift in real time and see when the regime engine signals that the market has entered expansion, you can explore the full model on SigmaQuant.